Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks, his website, rickackerman.com. Welcome back to the show, Rick.
Thanks for inviting me on. Always a great pleasure, Jim.
Rick, are the markets the result of the resumed trade war with China?
I think that up till now, the whole idea of trade war was kind of an abstraction, and news about the quote-unquote trade war was having its impact on the markets. But now it's not the trade war per se; it's really the damage that it's actually doing to the economy. We can see the effects on certainly U.S. grain exporters and exporters of pretty much anything, because the Chinese have gone all in. They're not coming around. They're really digging in their heels. So I think that the moves down in the market, in the stock market, based on trade war news are more, let's say, they're related more to fundamentals than they've been. The anticipation that this is really going to sap the global economy.
Mm-hmm. Now, with the Chinese saying they're going to stop buying American agricultural goods, are they the U.S.'s biggest customer?
Well, China has just gone down to number 3, really. They were a major trading partner. Now, with a major reversal, really, in trade flows, China is behind number 1, Mexico, number 2, Canada. So the slippage, American consumers, or it's not like they can't get these Chinese goods. They just happen to be coming by way of Vietnamese manufacturers now, and actually a lot of Chinese goods are kind of illegally coming through Vietnam. But yeah, China has already gone down 2 rungs on the U.S. trading ladder.
Now, of course, Canada has been suffering as well from Chinese wrath because we're holding that Huawei executive for extradition to the U.S. They've cut off Canadian canola, Canadian beef, Canadian pork. So Canada is feeling, the same kind of pressure for different reasons. What does that do to the North American economy overall?
Well, I think that it will probably increase trade between U.S. and Canada, although in some areas we compete with Canada, and net there's going to be less trade overall. The markets will sort themselves out, and all the buyers and suppliers will line up alternative sources, different trading partners. But I think that the big picture suggests that trade in a macro sense is going to decrease.
Also, both countries plan to give big subsidies to farmers. Does that defeat the whole purpose of free trade?
Yeah, you could say that. And, I don't believe there's really any economic argument to be made in favor of high tariffs. A lot of pundits have sort of come out of the woodwork there and talked about how in colonial times the tariffs were really what sustained America. We really needed protectionist measures at the time. But on a purely economical basis, to go back to classical theory involving the doctrine of comparative advantage, what that says is that if some other country can make something cheaper than you should buy it from them and not worry about whether they're subsidizing it or not. But that's only in theory, and the theory works simply because you can take the money that you save buying from China if they want to subsidize their products and you get them cheaper. And the ideal, that supports the theory is that the money we save we can invest in making ourselves stronger, reducing our production costs, becoming more efficient in the things where we excel. Unfortunately, with the fine hand of the Federal Reserve and all the central banks pumping like crazy, all the incentives that would ordinarily push that money into capital projects, capital investment, it goes into Uber and Apple and Google and Amazon and Facebook. So we've essentially squandered away whatever advantage we might have had by way of capital investment, and so that's why classical theory doesn't work. But to come around to the practical aspects of it, as much as I find it impossible to support tariffs, I'm all for this one, simply because the Chinese don't play fair. They're corrupt, they're sleazy, they're thieves, they steal intellectual property, and they are absolutely remorseless. So I think it's time we drew the line, and there's definitely a cost to each of us. We're going to pay more for all the gewgaws we ordinarily buy at Walmart or wherever, but I'm personally willing to say I'll pay the price, whatever it is, and I recognize that the price I'm paying is not nearly what the U.S. farmer is going to pay, and that's why I'm strongly in support of subsidies for the farmers. I don't mind paying more taxes if it's going to go directly to some beleaguered soybean or wheat producer.
We'll have more with Rick Ackerman right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, the Dow and the rest of the markets taking another hammering as we speak. Is this because of the increased trade war with China between the U.S., or is this just what the markets were going to do anyway?
Well, I like to I lean in the direction of the second thing that you just said. In fact, I wrote on it a couple of days ago that it really is the tail that wags the dog, and that in the particular case I cited, there was Trump out tweeting that we're going to, this was last week, that we're going to raise tariffs on a whole bunch of Chinese goods. Lo and behold, the market took a dive. And so the conventional interpretation is that the market dove on the news. My interpretation is that mysterious cycles cause stocks to go up and down. We're not going to understand how they work, but we understand that they do work, and it's certainly easy to target those moves. But I really think you can understand where if Trump had tweeted, well, we're really going to get tough with the Chinese, and stocks had gone up, which they have done numerous times on exactly that news, then, we would think, well, no big deal with the tariffs here. So to me, it's absolutely demonstrable that the news colors our perception, or the stock movement, stock prices moving up and down, color our perceptions and interpretations of the news, not the other way around.
If this is part of the natural cycle, are there any safe havens that you can take advantage of?
Well, the one I've been talking about for the last 6 months in all of our interviews, Jim, you really need to go where the yields look terrible. We talked very specifically about Treasury bonds and 10-year notes, and also, I think, specifically about some of the Nuveen products, Nuveen Muni Bond Fund, but I've been just off the charts bullish on the bonds, and forget the yield. When you talk about a 2% yield on the 10-year note, It's actually lower than that now. You're not really getting into that vehicle for the yield. You're going into it for the capital gain, the huge increase in price that you're going to get in the 10-year note if interest rates come down even a little bit. And as I was forecasting, they've come down quite a lot. I've got I've had for a while a 1.47% target on the 10-year note, and today it's trading. It's definitely on the move here. It's trading 1.64%, down huge. It's down almost a full tenth of a percentage point. That's a big move for such a big vehicle. So I see it most immediately going to 1.477, which still leaves room for quite a capital gain if you're in this vehicle. And I do think that it's on its way to zero. And it's not going to do much good. You think, oh, zero, we're going to have a boom in housing because mortgages will be cheap and this and that. But I've always emphasized that we should look at mortgages in real terms rather than nominal. So that during the housing crash in 2007 and 8, you could get a mortgage cheap enough, but how cheap is it really if the price of the underlying asset, namely your home, is decreasing in value over that time by 30%? So that still applies. 2% mortgage is going to look prohibitively high. It will be crushing if you get a housing deflation.
Is housing deflation happening in the U.S.?
Let's just say we've topped. We've had signs of a top in some of the really lunatic markets like the Bay Area, and we've seen the upper end of it where homes in L.A. and elsewhere are being offered in excess of 60, 70, 80 million dollars. A lot of these pencil-thin buildings in New York is already overbuilt on the high end. So we've got a burden on the high end, but the larger deflation in home prices will come simply because the baby boomers have no one to sell their homes. If they want to downsize, which they all do, there's no market for the homes. So I think it's that not the ultra high end that's going to crash for sure, but the bigger crash in dollar terms will come from the middle of the market in that range of, let's say, $300,000 to $600,000, $700,000, $800,000 homes. Who's going to buy those homes? The millennials can't even find jobs other than the dozen of them that work for Google.
We'll have more with Rick Ackerman right after this.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Rick Ackerman. Rick, is gold going to continue its run?
I'm loving gold here, and I think we must have talked about that before, but in practical terms, all my subscribers have jumped into this GDX, which tracks the gold mining stocks. GDXJ tracks the junior exploration stocks, but they've been really, really good. And if you got in even as belatedly as last week, as a lot of my guys did, you could double your money or much better in call options. At this point, gold bulls have been disappointed so many times since 2011. It's like every rally we see goes a little ways and then we get crushed. And I think it's different this time, but merely from what's happened in the past, even the most bullish gold bulls, they're the worst off because they've been conditioned to think, oh, geez, I better take some profits on this rally. So what happens is the gold bulls are in, they've been in for years, and then as soon as they get a move, they start scaling out whatever they've been sitting on, and lo and behold, they're out of stock or options or leaps or whatever before gold is even a third of the way into its move. So that's happening, and even in the ranks of my own subscribers, I've got some people who are very bullish on gold. One guy in particular who was in GDX calls in size at lower prices, and the gold's going up, and he's posting in my trading room. Well, I'm down to 25% cash or 50% cash or whatever. So we have to avoid the temptation to think that this is it, that every ratcheting move up in gold, we gotta ease out of more and more of what we've been holding on to for months or even years. But I did put something out on Facebook today on the Rick's Picks Facebook page concerning one indicator in particular that we looked at today. It's JDSD is the symbol, and that's the 3X gold junior mining stock bear. In other words, it's leveraged to the downside, and if gold is going down, this JDSD is going up. But looking at the chart, it looks like JDSD, currently trading near 13, could fall to 7 and change before it really hits bottom. And if it continues to fall, that means that the gold mining junior stocks will continue to move higher. And probably gold itself, the gold futures, or maybe some of the ETFs that, like the one that goes under the symbol GLD, they will hold their own or possibly go up. So that's basically saying stay in your gold positions. Don't give them all up right now, just on the rally that's occurred so far.
Rick, thank you so much for chatting with us.
Well, it's always a pleasure to just connect with your large audience, and I appreciate your inviting me on.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks, his website rickackerman.com. If you have any questions for Rick or any of our other guests, you can send them to info@howstreet.com. Find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.